Well, good morning, everyone. Hey, Nate, good to see you. Are you
Oh,
muted? Oh,
hello.
there you are.
I said, did you survive without me yesterday?
Barely, but we did. Ken came on, gave a great presentation on sort of risk, having a positive expectancy, position sizing, all sorts of stuff.
Cool. Sounds good. Well,
Yeah.
hello and happy Tuesday, everyone.
Nate, have you tried this pop out sidebar feature?
I have not tried the pop out. Is it open in a separate tab or maybe even a separate
Separate,
device?
separate, either one.
Oh, nice.
It allows me so I can see the chat while sharing screen.
Oh, I can do that anyway because I don't have a weird Mac like you do.
Time to ditch the Mac, huh? Let me see if I can go ahead and do this.
Morning, Faith. Morning, Matt. Hello, Jody. Hope everyone is doing well. Another slightly bullish day here we got going so far. Lots of green out there. Oh, that looks nice, Graham.
Yeah, let me move this guy over here.
Hey, Peter.
Let me see what happens if I do this. Oh, cool. So you get a full screen.
I'll tell you what, Graham, missing out on your progressive analysis you mentioned the other week has really come
Mm.
back to hurt me.
Yeah, I was gonna bring up progressive again today.
Really,
I told you gotta be patient, even though I own the stock, but for
yeah,
a trade.
really
Hey
beating me
Stacy,
up
hey
right
Peter.
now.
The one that is really bugging me this morning. I shouldn't even say that, but the Lily trade.
Oh,
I
yeah.
walked you guys through why that may have been one that I should probably skip in the future. Well, it turns out it would be making pretty good money right now. But that's all right. Good morning, Des. Good morning, Spider Monkey. Well, we'll get rolling here in a second today. I'm going to do my normal market analysis. I do this every single Tuesday at 10 a.m. Walk you through where we're at, look at the internals, look at the sectors, and give you my forecast for the week. And then we'll do some live trading together at the end. Now, let me see, Nate, with the way I've shared my screen. If I pull Thinkorswim, oh, it won't even show Thinkorswim on this. Oh, that's annoying. The Mac. All right, I'm going to have to change my screen share setting here. Let me go back to presenter view. Still getting used to this new setup here. All right, can you see my screen now? Even though you have to see all this at the top.
Yeah, yeah, you can see it.
All right, now let's see if I can bring my Thinkorswim up and if it pops up. Can you see it?
Yep.
All right, I'm gonna just go ahead and make these settings a little bit bigger so when I pull it up, you guys can see it a little bit easier. Let's go large. All right, cool. That might be a little bit easier to see the tickers and everything. That's my hope.
Yeah, I think it looks pretty good right now.
All right, cool. Look at this. Tesla, this is crazy, is almost back to the big Trump and Elon fight day. It's
Yep.
only $7 away. It's up $8 today. So another day like today, and it's recovered all of those losses, which is crazy. Let me go ahead and all right. Well, let's go ahead and dive in here. Let's see. Question for you both. Talk about short-term trades. How do you protect your long-term portfolio if possible? Please email me. No one talks about this. Are you talking about like hedging MCP? For me personally, I pick stocks that I really like that have consistently worked out, consistently gone up, and I ride them because to me, hedging is often like it's like buying insurance, um, but I think less effective than real life insurance. This is my personal opinion. Um, Basically, everything I've ever seen with hedging, you end up underperforming what you would have done without it. And again, this is my opinion. I take stocks that typically do 12, 14, 20% a year is what I'm going for. With hedging, I'll cough up 2 or 3%. However, that obviously does help smooth out the downturn. So it just depends where you're at in life and what you want to do, what your goals are. Um, Unlike I say, it's a worse version of real insurance in the real world. I mean, like if you get into a car crash, like that's going to be a big deal. It's going to really set you back. Versus if the markets take a 20% dip and you can afford to ride it out and not pull out or withdraw, you should end up being fine in theory, because every single dip in the past has recovered, including this most recent one, which is already almost back to all-time highs. So that's my take on it. Is my hedge is called sit on my hands and wait, make sure I'm in the good stocks at the time, and then try not to pull out of the account. But that probably didn't even answer your question at all. But that's just my opinion. Now, if you're like my father-in-law who's retired and wants a smoother growth curve, first off, probably pick something safer than some of the stocks that I like to trade, like Oklo. I would never suggest that he buys his whole retirement account in Oklo, although it would have been awesome for him, but it would have also been terrible for him. So, you know, you want to be smart with what you're doing.
Yeah,
Um,
and I think for us, I mean, Graham could speak to this as well. A lot of times we separate what we're doing in our investment account, what we're doing in our active trading account. I mean, for me, those are two different accounts, two different things. I hedge in my like active trading account via strategy diversification, not really stock diversification. So to me, I think that's a way more effective way. And I think there's lots of good examples of this. If you go back even just to 2022, which was not like a total market crash, but it was a big correction. Everything was tied together. Gold was down, bonds were down, the market was obviously down. All the kind of traditional hedges that financial advisors would have put you in didn't really do a whole lot of good. So you basically, from 2010, 2022, you held 20 or 30% of your assets in really underperforming stuff so that you had a hedge. And then 2022 came where all of that was supposed to pay off and make back, the reason you were holding it. And it actually just went down. So you lost, probably 200% of compounding gains over a 12-year period for holding these, bonds or gold or whatever you had. And they really didn't do a whole lot during that 2022, bear market. And so for me, that strategy diversification is a lot more effective than, just having assets that are different, because at the end of the day, we're in more of a liquidity market, I would call it, in today's day and age. We don't have time to get into all of that, but basically, when you get market collapses, it's more liquidity based than asset based, which means everything for the most part is going to go down. And that's why I like that approach. And again, for my active trading account, it's a very different equation than for something like a retirement account.
mhm. We got a question here. The link wasn't posted in one click. Did you guys get the link in one click?
Oh yeah, should have been a direct link right into the room. I'll have to check on that.
Well, if not, we'll send that now. If you guys have the $1 VIP membership, you should be able to get an alert in one click. I'm not seeing it either, which happens. We'll get that cleaned up and make sure that we get that scheduled for you guys every day. All right. With that said, let's go ahead and jump on in. Here's the current trades I have open from the opening playbook. Again, it's not every trade that we've taken or Nate's given. I'm trying to not have 20 positions open at once. I know you guys probably feel a little bit the same way, but sort of a mixed bag right now. Obviously, with Tesla taking a pretty big beating last week with the Twitter fight. EQR and Costco, I'm not too worried about at the moment, but CME looks like it probably will be a loser. With that said, on the positive side, Oklo obviously still looking really good. That should expire here soon and pay the full profit. And some of these others turning around. Bitcoin, which I'll talk about today, is really looking good. I'm really, we're going to be watching it closely. I'm really anticipating a break above the all-time highs here coming very soon and to the 125K range on Bitcoin. So I am hanging on there. For the Telegram of the week, again, here, Bitcoin. I'll talk about this more in a second. But I posted this yesterday with momentum flipping back to yellow on the Bitcoin futures market. So you can see red means you're staying out. Yellow, we're on deck. Green means go. Just flipped back yellow again yesterday, and it's actually green now today. So momentum is picking back up in Bitcoin to hit about $110,000 on the spot price, and just pulled back a tiny bit since then, about $1,000. Here's just another link for this. If you guys have the VIP membership for $1, you already have this. But if you don't, I made a cool little template trade tracker for you guys. So you can click that link. You can make a copy of it and chart your own trades, see how you're doing. You can leave notes and all that kind of good jazz. We had some people asking, we have all these awesome trade trackers in our memberships. What can they have one? So made this for you guys, just a template. You go in and make a copy for yourself. For the morning market update, right now we're mostly flat across the board. Again, Bitcoin, it doesn't really show it, but it's up big over the last 48 hours. It hit about 110 on the futures market. But other than that, kind of quiet. And it'll make sense why, because, well, a couple big things this week. This is one of probably the biggest weeks that we've seen in a while as far as economic news. We have President Trump speaking today after the closing bell, which we'll see what happens there. And then tomorrow morning, we have CPI, which is our key inflation report, a really important one for the Fed and their decision making. Actually, let me just tell you this. So CPI is tomorrow. Next week, we have the Fed interest rate decision. In my opinion, what this report says will completely affect what the Fed's going to say next week. If inflation comes in tomorrow morning higher than expected, Fed's going to have to keep saying, they're going to have to keep being hawkish and say, we're going to keep rates high. We can't risk having inflation come back. However, if CPI is lower than expected, I think that Jerome Powell will keep kind of that new tune that he's put together where we may get rate cuts sooner than they originally projected. In which case, I think that the markets are going to go right back to all-time highs in a matter of days. So that's going to be a really, really important one tomorrow morning. Of course, I'll keep you updated here in the opening playbook tomorrow at 10 a.m. Talk through what happened, kind of review the markets and see what that might mean for next week coming up. We also have the PPI report on Thursday, which is another key inflation report as well. So really, really big hitters this week. It's not the small news coming out. It's the big ones. And this is not in a couple of days. This is tomorrow morning. So make sure you're position sized accordingly. If you're worried about volatility, maybe take some profits off the board. If you want to go for gold, maybe put on some a little more speculative trades for a move higher. Again, next week, some typical reports. We do have Thursday next week is a U.S. holiday, so we will not be having the opening playbook, I don't believe, right, Nate?
Correct.
Yeah, so no opening playbook next Thursday. Markets will be closed. But the big report will come 2 p.m. on Wednesday with the Fed interest rate decision. Everyone expects them to hold the rates, but there is a slight chance that they could cut or at least say that next interest rate decision will be a cut, in which case the markets would turn very bullish on it. And you would see things like bonds and small caps really start to gain some steam. For the charts of the week, let's take a look at this. I covered this briefly yesterday, but Nate, you weren't here, so I'll catch you up to speed.
Thank you.
This looks at the net flow from hedge funds over 2025. That blue line is net flow bullish. Red is net flow bearish. We haven't seen a net bullish flow since the start of the year.
Yeah.
In hedge funds. They've been mostly selling, shorting, pushing the markets lower. However, just the other day, it just flipped above that break-even point. So now the bulls are starting to come back in control with the hedge funds. So that's going to be awesome. I think it's going to be one of the main reasons why I believe that we are going to see all-time highs here very soon. Here's another fun one for you, Nate. You'll like this one as well. This is a pretty cool chart that shows what happens when Tesla drops like crazy in a single day. So last week on Thursday, Tesla dropped. Was it Thursday or Friday? I can't remember. But we saw Tesla drop. I think it peaked out about 22% on the day, but closed about 17% down from open to close. And so what normally happens after something crazy like that? Well, historically, Tesla doesn't just bounce, it launches. So if we look at similar massive corrections in the past, when they've had a drop of 17% or more, let's see what happens. This is, if you can see the time frame here, 1 week later, 2 weeks later, 1 month, 2 months, all the way to a year later. Let's start at a year. Every single time Tesla has had a 17% intraday drop, it's finished higher over the next year. We're not talking about small returns here. It's 323% average return.
That's crazy.
I don't think that's going to happen, but I honestly would not be shocked to see 100% return from here in Tesla. Even if you look 6 months later, 100% of the time it's ended up higher. And look at this, the average return right here, 175% over the next 6 months. Again, I don't necessarily think that's going to happen, but I wouldn't be shocked to see a 50% return from here. I mean, it's already made a pretty large move up from that dip. And even 3 months later, 100% of the time, it's been positive. And then you can see, even if you get down to 1 week, which we're in right now, which is going to most likely finish positive at the current rate, 71% of the time, in 2 weeks, 86. So basically what I'm showing you here is there's a lot of fear coming out, a lot of negative media, people saying, oh my word, this is terrible for Tesla. Well, maybe at the surface level, but if you like to be a little bit of a contrarian, buy the rumor, sell the news, or in this case, sell the rumor, buy the news. This is honestly a pretty great time to be getting Tesla at a pretty awesome dip, in my opinion. Here's a little look at Bitcoin. Again, like I said on Newton, it just flipped back to green this morning. Last time it flipped green, it went about 20% from there. I think that could definitely happen again. And if so, that would put us right about that 125K price point on Bitcoin, which has kind of been my first initial target that I've been telling you guys for the last year or so. So this is definitely something to keep an eye on. I have a couple trades open. I'm not going to add to them right now. But if you don't have any exposure, the best or the easiest way to do it is ticker IBIT, which you can access in any normal brokerage account. I showed this to everyone yesterday, Nate. This was cool. I saw this sweet chart with Bitcoin whales accumulating, had some terminology that I wasn't 100% familiar with. So what I did was check this out. And again, I showed this to you guys yesterday. So if you're here yesterday, just bear with me. If you weren't, let me show you this. So basically what I did is I pulled up my good friend ChatGPT here. I just copied this text that I saw online into ChatGPT. Said, what does this mean? And you can even add a screenshot. So I'm going to take a screenshot of this. So you don't have to go Google, click a bunch of links, read a bunch of articles. Oh, that's great. All right, let's start with this first part, see if that'll work. If not, Nate, I'm going to ask you to do it. So I just posted the text in here. So after a short pause, Bitcoin holders are buying all again. Wallet cohorts are showing signs of accumulations with the 10 to 100 Bitcoin and less than 1 Bitcoin groups both hitting a perfect score of 1.0, the strongest possible signal. Okay, interesting. Let's see what's happening. All types of Bitcoin holders are buying again. Everyday retail investors, mid-sized players. Two specific groups, the retail mid-sized holders just hit a 1.0 accumulation score, which is the strongest signal. It means they're not just holding, they're actively and aggressively adding to their positions. That's really important. The buying is increasing. So no selling from those cohorts at all. This kind of synchronization has historically shown up at key turning points in Bitcoin's bull markets right before major price surges. It gives you a whole little rundown. And it even says what a pro might do. Stay long or add exposure if you've been waiting on confirmation. Use this as a signal to watch for breakouts. Tell your radar, this is the kind of signal that can lead to multi-week or multi-month rallies. So I didn't have to go Google this and learn all about the cohorts or anything. I just copy and paste it in here, and within about 10 seconds, I have everything I need to know and even a quick action plan as well. You can do that as well with the image. It obviously wasn't working for me. Let me just try doing this. See if this will work. So if you just saw someone post an image and said, this is great news. See if this will work. The images aren't working for me right now. Worked yesterday. I can show you here. Actually, we did it live. What does this chart mean? It gave you the same breakdown as well, and actually broke it down a little further. Gave you what the scores meant, and all sorts of good jazz. So that's a cool little just reminder that if you guys ever have something you see or something interesting, my opinion, start using things like ChatGPT. It's way faster, way more efficient, really, really awesome tool. All right, back here to the slideshow, presenter view. Please don't start me over. All right, cool. This was something I showed you guys last week, and I thought it was interesting to see. Typically, we've seen the SPY, the S&P 500, typically gains more overnight than it does during the day. It's actually down during the day over the last 35 years and up overnight. However, with this all of this post-market news that's been happening, we've seen the inverse where it gains during the day and drops overnight. Now, long-term, I expect that to flip, but this is kind of what we're seeing right now. It's the inverse of that 35-year pattern for the short period of time. However, what really caught my eye here was this information on gold. Gold typically goes up during the day and overnight. Or not typically, sorry. This is since the this over the last few months with all the news. It's gone up during the day and overnight. We've seen that huge rally in gold, but then it led me to the question, if this is inverse of what's happened in the long term, if the short term right now is actually not what's the long term, what does that look like for gold? So I also asked Google's AI, over the long haul, over the last 35 years, how does gold perform from open to close versus overnight? And you can see here a similar sort of phenomenon as the S&P. Over the long haul, gold annualizes about negative 12% per year by buying the open and selling the close, or in other words, just owning it during the day. However, if you only own gold overnight, it annualizes at 38% per year. That's an insane annual return on an underlying asset. And this is gold. We're not talking about some speculative company, just good old steady gold. So that's another really cool insight for you guys too, hopefully, where if you see something cool, you can do a quick research. Now, I should have a class here on the different tools we can use and how easy it can be. But all I did was I just asked it, hey, can you run a report for me to show me since the inception of GLD how it's performed from buying the open, selling the close, and compared to buying the close and selling the next open. And it did all of the work. It takes about 3, 4, 5 minutes for it to pull all the data. Google's deep research tool is really cool, but then it gave me a nice, pretty summary like this where I can see, wow, that's a really, really interesting phenomenon. Not only was this really positive, but owning during the day was actually negative, meaning your net difference versus just owning and holding gold is way, way bigger. So that's a fun little insight for you guys. Market overview, taking a look at where we are. Last class, I told you I think we're going to get a healthy consolidation, chop around higher, hopefully get around that 600 number by the end of the week. Nothing too crazy, nothing too exciting, but I thought, I said, I think we're going to just consolidate in the upwards trend. And that's exactly what happened, which is awesome to see. Here's something interesting. If we look at the ATR on the S&P 500, over the last couple of months, since May, you can see that the volatility has been decreasing on the S&P. What this does is measures the average daily move or the average daily range of these candlesticks. And a downwards trend typically means volatility is getting squeezed out. Things are getting back to normal or normalizing for us. So that's that consolidation that I was mentioning. It's what you can see here kind of happening in real time. Same can be said for the volatility index, the VIX. We've seen the ATR on the VIX take a huge drop. We had those massive swings. I should have zoomed this out more because it was a huge, huge number on the ATR, and it's just been steadily decreasing since, which is really good news for the markets, in my opinion, as well. And we're down below that 20 number, which is kind of that risk on, risk off line for us in the sand. We're down to 17s on the VIX, which means that healthy markets do look like they're returning. Oh, here you go. Here's the zoomed out view. So this is where it got on the ATR just during that Liberation Day drop, all the way to 9. Now we're back down to 2. So you can see these spikes happen out of, crazy spikes. Then volatility starts to decrease as the markets really rapidly recover, which is exactly what we saw here. So the question is, where do we go from here? Well, if we're looking at the fear and greed index put together that looks at market internals and rates it all together, we've had no change week over week. Last week was a 63 rating, which is in the greed zone. This week is 62. So we were at extreme fear for a while. Then we flipped back to extreme greed very briefly. Now we're at a healthy, in my opinion, a healthy greed level. This is a really good reading for us right now. On the CPC, which looks at the options trading to see are the bears in control, the bulls in control, are we overextended one way or the other? We are still at a normalized range. We are we're moving towards the overextended to the upside zone, but we're not there yet. We're 0.79. Really don't want to see it below 0.725 or 0.7. At that case, I think we'll see a more decent pullback, 5% or so on the markets. But for now, we're still in a healthy zone here. If we're looking at the percentage of stocks above the 50-day moving average, so obviously the S&P has broke above, and how many of those stocks have been going and participating in the rally? Well, right now, about 75% of stocks are above their 50-day moving average, which is a really healthy number. If we get above 80%, that's typically when you'd see potential pullback setting up. Again, when that happens, you probably see the CPC down here. They'd line up hand in hand, but we still have room for upside based on this reading. And especially if you look at the percentage of stocks above their 200-day moving average, this one's a little bit more of a mixed bag. Right now, only 46% of stocks are trading above their 200-day moving average. Now, obviously, the S&P is above the 200-day moving average, so you would think that a lot of stocks would be up above it as well. However, not every stock is participating in this rally, which is kind of the market that we've gotten used to over the last decade or so, with tech just absolutely smoking it. And they are again now. I'll show you the sector change week over week here in just a moment. But it's interesting to see that there's still a lot of upside for a lot of stocks out there in theory. And we aren't even close to any sort of overextended range here on the stocks over the 200-day moving average. On the seasonals, I told you this last week. I'm going to tell you again. It's a good time to be selective. We typically get a little bit of summer chop over here over the next few months, so we just don't want to rush into any position. We want to be more selective. If we look at the month over month seasonal change in the markets, typically we get a bumpy road over the summer. So June's typically flat, July's bullish, August and September are negative. This is the S&P 500 over the last 60 years. So it's not like 10 years of data here. So 60-year stat chart here. And if we line that up with the seasonalities of the presidential election or the inauguration year, we did see this lineup so far. We are breaking against it now, which is awesome. I called all-time highs in June a couple of weeks back. I think it was back here in like late April when we were getting crushed. And if this trend continues and we can get through this month on a positive note, that would be very, very good, because July is typically a nice bullish move for the markets as well. Seasonally speaking, this chart shows what the S&P 500 averages in the first year of a president's term. So again, to restate, I still think all-time highs in June, but if not by June, then I do think July, and I'm very, very bullish on that as well. Again, it's all going to depend. A lot of that's going to depend on the CPI reading tomorrow morning. So my upcoming prediction for you guys is basically a two-way play. This is right up Nate's alley. CPI, CPI, CPI. It's all based on the CPI. I believe if we get a reading at estimate or below estimate, which means inflation's cooling, I believe that we're going to see a move kind of like, this right here, bang, 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 or, anything that we ever get good news on when we get those multi-day skirts higher. That's what I think will happen. I think we'll get to about 613 on the SPY. However, if we do get negative news or increasing inflation, I think we are going to go back and test the 200-day moving average, which puts us by about 578, which is about a 25-point drop from here. About a 25-point drop, which is about 5% on the S&P 500. So if I were to play this and I wanted to have some fun with it, I might choose next Friday's expiration and put on a bullish elite trade, or jump trade as Nate calls it, and then also a bearish one where you can net out 20, 30, 40% regardless of which way the markets move, as long as we do get a move. For earnings season, quiet week this week. We're nearing the end of earnings season here. Not a lot to talk about. We got Adobe on Thursday, but they've kind of just been an overlooked company recently. Oracle on Wednesday. But again, not a lot to talk about here. And it's interesting how this lines up. Last week, I taught on trading the turn of the month institutional rebalancing in the markets. Basically, the theory is that at the end of each month going into the new month, hedge funds, pension funds, mutual funds all rebalance their positions. They leg into stocks that are doing well, and they start cutting the stocks that are doing poorly. And in theory, if you can track that bullish move at the beginning of the month and the accumulation on the volume, you can ride it higher all month long. But I did tell you guys, each month is a great opportunity to trade. However, the first month of each quarter is the best month to trade. So you can see this blue line here is the start of each quarter, how the markets perform over that month. It's taken almost all of the gains versus middle of the quarter and end of the quarter. Both are they're both positive, right? They're both still good times to be in stocks, but not nearly as bullish as that quarterly rebalancing. So we'll be talking about that again. I'll do that training again here going into July because that should be hopefully a great time for us to get long some great stocks, add some position sizing, and again, it matches up with the seasonality too, with July being the only bullish month over the summer. So that'll be a fun one to keep in mind as we get to that. For the sector view, looking at June, breaking it down by the 11 sectors, a pretty mixed bag here. I'm going to show you here. My favorite ones are communication services and infotech. They're two of the three positive ones in June. The other one that's positive is healthcare, and we are seeing healthcare start to slowly gain steam right now. However, as I'll show you, it's still lagging the rest of the market. So it would be more of a speculative play, like stocks like Eli Lilly, which again, I traded the other week and I took a loss on it. Told you guys my mistake was I should have stuck to my good sectors. However, this is heating up again right now, so that could be a more speculative sector to look at. Ones that I'm going to avoid is materials. That's the worst one for the month. It's also been a poor performing sector, but also financials, which has been one of our favorite sectors to trade all year long. However, I don't want to have something where a couple things look good and a couple things look bad, and we hope for the best. Now, I want something that all lines up, and financials just don't line up for me in June, as it averages a 1% drop in the financial sector during the month of June, which interestingly enough, we are seeing happen with even my favorite stock, one of my favorite stocks, like Progressive right now. I've covered this the last couple of weeks where we're having this ascending triangle on Progressive. We were waiting for a break above 290 to take a long position on it. And as you can see, yesterday it fell out of that ascending triangle and took a big nosedive and trading even lower today. So we're seeing that, interestingly enough, line up with the seasonality on financials, and Progressive is a stock in that sector. So this is basically why I wouldn't rush into anything financial. It's just a good example of that. So last class, I told you that these are my favorite sectors. I put Bitcoin in blue because I think everyone should have at least some exposure to it. I do think, like I showed you earlier, the next leg up of this bull run, probably, in my opinion, the last leg up of this bull run is going to happen here very soon. But outside of Bitcoin, if we're actually looking at the individual S&P sectors, I told you industrials, communications, and technology were my favorite. Industrials because they're leading the markets, communication and technology because they're the best seasonally and they're strong sectors right now. And I told you I was avoiding or going short on the material sector. So let's look at the week over week rotation, the notable shifts here. These arrows here, just so you guys know, shows how many spots it jumped. So technology, which was one of my favorite ones last week, just jumped to the top. It jumped 4 spots to the best sector right now in the markets. Industrials and communications still in the top 3 as well. So those were my picks, all now at the top, looking pretty. We are seeing discretionary gain some momentum, which is to be expected with technology. And then down here at the bottom, just some shuffling around, but not a lot to talk about down there. But it was awesome to see technology make such a big jump week over week. Obviously, a lot of that driven by NVIDIA, which had a huge week as well. So my top sectors for this week ended up being perfect, where they were all at the top here. Still communication, still industrials, and still technology and Bitcoin. But fun to see them all go to the top. So let's get down to the nitty gritty. We're going to break down a couple of different trades for you guys. Top apex signal of the week. There's one reason why I bring this up, and let me check. O'Reilly is having just did this morning. Perfect. A 15-to-1 stock split. So this screenshot was taken yesterday. Obviously, it's been a great stock. It's a little bit longer hold time. However, every time we've tried to trade it in here, the options were pretty far apart. They were expensive. Not a lot of people like to buy a stock that trades for $1,350. You know, the options cost thousands if you just want to buy a call. However, today, if I can get this to move, why won't my Thinkorswim come up here? Well, this is annoying. There we go. Today, if we're looking at O'Reilly, it's no longer $1,300. It's $90. It shows Thinkorswim needs to adjust. It says down 93% today. but that's just because it did a 15-to-1 split, bringing down that price of that share price down to a very tradable range. I'm interested to see here. Still not a lot of volume on these new options. They're going to be wonky for a while because of the split. Like, look at this 91.33 strike. That's not something you see every day. 92.67. So this is going to be one that we're going to be able to trade more actively. So that's why I posted it as my top Apex signal of the week. Not necessarily because it's my favorite one to trade right now, but just something to keep in mind. This is super awesome to see. O'Reilly on Apex has been over 80% success rate trading the signals. So now that it's going to be more tradable for us, it's going to be super fun to participate in. Let me go ahead and pull up the other Apex hits. I know I saw Lily today, which again, it's not been the strongest sector. However, seasonally, this is about the time of the year where it starts turning around. Funny enough, it actually hit the last 2 profit targets. But here, Lily last week on Friday had a new entry. It's up nicely this week. So if you want to take a trade, Lily would be a good, more speculative one. Again, only because seasonally, these are healthcare stocks are strong in June, where most of the market is not that strong. So if you want to trade Lily, profit target 885.36 with the stop price at 615.90. Let's keep flipping through. AMD hit his target. Meta hit the target. NVIDIA is getting close to the target. Let me see if I can find a fresh one for us that looks good. Or if they're all at their targets. And it looks like they're all at their targets, or they're these financial ones that have gone against them. There was one in here, I thought. Bitcoin. I'll just show this one again. If you guys are just starting to get invested in Bitcoin, here's the target on IBIT. I know someone asked it about the target for IBIT. For Apex, that target is 66.15. So if you want to trade Bitcoin, I entered back here probably at near the highs, and then it's flush, and now we're coming back up. So again, my options are still good with this target in mind. So Bitcoin via ticker IBIT, which is like trading SPY or QQQ, is an Apex entry. This is a weekly chart with the profit target of 66.15 and a stop price of 49.46. So let me actually add that to here. So when I post it in the members portal, you can see it. Does anyone want me to give options on the IBIT potential setup? I've already got multiple positions open here. So I'll probably take one just to show you how it feels. Is IBIT updating the Apex? It should be. I sent in the code to change it from BITO. I sent in the code the other day to the team, but I'll follow up with them. BITO was the only way we could trade it before the ETF launched and had options. BITO, or excuse me, did I just say that? BITO was the only way. But now I don't like trading BITO, and I'll show you why. I never really loved it, but it was the only way we were able to trade Bitcoin in the past, unless you wanted to actually go buy Bitcoin. But let me show you this. This is interesting. So BITO, people assume is like a Bitcoin ETF. It's not. So here's BITO in a downtrend over the last year. And here is, let me just show you, here's real Bitcoin. Totally different. How can that be? How can it be so offbeat? I mean, even IBIT looks just like Bitcoin, right? Here's IBIT, here's Bitcoin. They look the same. BITO does not. Well, the reason is the way this one is structured. It trades the front month futures contract. So just like if you're buying call options and they decay against you over that month, it's the same thing here for BITO. It's holding a decaying asset. So when Bitcoin is flat, BITO loses money. When Bitcoin goes down, BITO loses a lot of money. And when Bitcoin goes up, BITO makes good money, but they rarely ever outperform Bitcoin or IBIT. It was funny. I was telling Nate the other day, I think that maybe the most guaranteed strategy out there would be go long IBIT and short BITO with one of his pair trades, just because there's an arbitrage opportunity there. I actually asked on my ChatGPT note here, I asked ChatGPT to run the data, and it was a 25% annualized return by going long Bitcoin and going short BITO at the same time at a 1-to-1 holding ratio.
Yeah, and we actually did that a couple of times on those pair trades, but you have to do it with some size for it to really do much, and you have to get either the shares or in the money calls. So I think I bought like $5,000 in the money calls on IBIT, same on BITO. On the days where it didn't move much, you were just kind of losing money, down a couple percent. But the cool thing was if Bitcoin jumped like 3%, it seemed like the calls responded, 1.5 times better on IBIT. And the puts were, a little bit better on the BITO side. So definitely a viable trade. You just risk if you get, if you're doing the options, obviously you risk if you don't get one of those big moves in the time you're holding it, then you're going to be left holding the bag. But on the shares, I think it would be almost a guarantee.
I had some people say yes to the IBIT trade. Let me just type one up over here. I'll give you guys both a call option and one of my spreads that I like to trade. So IBIT, let me go back to Apex. That is not Newton. This is a price action weekly indicator. Here's Newton down below, also positive for IBIT. I'm going to go out to 18th of July here to give us some time. You can see, look, I'm loaded up right now with June. Let's go out to July. Give us a little more time. If you want to do a basic call, I would probably buy the 62 or 61 strike call. So let me just type this up. By 18 July 2025, 62 call. Let me just type this up. Basic call. Then if you want to do debit spread, like I like to do, you could do a wrap order, although it's a little bit higher. So let me see what the wrap order looks like. My big screen is killing me here. Let me see what the wrap order is priced at. Oh, that's actually great. If you can get filled at this, that's an amazing opportunity. Buy 18 July 61 2025 61 call. Sell 18 July 25 62 call. Net debit. Wow, it dropped to 40. I'm just gonna put 50 here. So here goes. Coming to the chat. BITO does pay a dividend. I had that factored in though, and you still made money going short BITO and long IBIT. So here you go. I posted it in the chat there. If you can, let's just say 50 cents to keep it simple. Obviously, get the lowest you can. Pay a limit or use a limit order. But here I can get a 1-to-1 risk to reward ratio where it's either I'm going to double my money or lose 100% here if Bitcoin barely moves. So let me show you. Filled right away at 50 cents. IBIT over the next month only has to gain this much where my crosshairs are. So even if we get another pullback and then a surge back to all-time highs, or not even all-time highs, but 110 range, 109 range, I'm going to make 100% return on investment. So Bitcoin doesn't even have to move that much. It doesn't even have to gain a full percent from here. And I'm going to earn 100% ROI. So I posted that there in the chat. Let me also give you guys, if you want to be a little more speculative, if you want to go for gold, go for that target. I'm going to give you what I call an elite spread, which is just an out of the money debit spread where you can get a little more bang for your buck. So again, let me go ahead and check the prices here where I'm going to use that profit target price is 66. So buy 18 July 25. I should just copy and paste this. It'll be easier. 65 call, and you're going to sell the 66 call. It's currently trading for 32 cents, which is going to give you about a 200% ROI. So this last one here, I just posted it all together again. But that last one, that elite spread, is out of the money. You need Bitcoin to move. You need it by 18th of July to get to where my crosshairs are here. So if that does happen, you're going to make a 200% ROI. So I gave you two trades there. One is going to pay 100% if Bitcoin is here. The other one can pay 200% if Bitcoin is above here. Both, I think, very, very viable trades and good options to take. I'll go ahead and set that one. It's at 31 cents right now. And again, I'm risking 31 bucks to make 70, a little over 200% there. We'll see if it fills. So there you go. Let me post this in here too. Nate, did you give him the link for the $1 members portal by chance? I do with every trade. We just posted it in a trade doc like this.
I'll grab that right now.
You can see it there. And then if you do have that $1 VIP membership, we had to charge something for it. You come to the portal here, you'll be able to see the trade entries right here and easily access everything we talked about today. So if you ever miss one, and you want to catch a recording, trade entries, see the slide decks, it's all in there for $1 for VIP. For the new hot sheet pick of the week, oh, I did not mean to hit that button. Let me go back to presenter view. Hot sheet pick of the week. This is our seasonal pick. Last week was Tesla, and Elon and Trump came in and duked it out to really set us back there. However, amazingly enough, our more conservative play there looks like it might actually end up positive. But this week is on Shopify. Ticker Shop. I believe Shopify would be a tech stock, or it's discretionary. Let me just give you the exact. It's a tech stock. We like tech stocks right now. Tech's our leading sector at the moment. Shopify looks good. It's a 23-day hold time on average with a 7% gain on the underlying stock. So what does that mean to me? That means we want to go about 23 days out or about end of the month, depending on the options liquidity. So we want to go 3rd of July, we'll call it. Give us about 23 days from here, roughly speaking. Actually, to the dot, 23 days. And then what you can do is you can buy a basic call option if you want. They're $500 a pop. Be my guest. What I'm going to do is another spread trade. I'm going to give you guys both the wrap order, which wrap orders always go for about a 1-to-1 risk to reward for a small move in a stock. And then I'm also going to give you the elite spread, which is going to, we're going to bet that we're going to get that bigger upsize move like we typically see seasonally for this stock. So I'm typing it up over here. So I'll start with the wrap order. Wrap order, I'm going to go here at the money. It's right there at 109, we'll call it, just to round up. So I'm going to wrap it by buying one lower. Man, this large text is crushing me. Buying the 108, which is one below the current price. Selling one above the current price, which is 110. Right now, it's trading for about 113. I would like to see it closer to $1 here, especially given that the current price is right in the middle, right at 105 now. But let me type this up. We'll see what happens with the price. It's the 3rd of July expiration. I'm buying the 108 call. I'm selling the 110 call. All this is going to do is give us better risk to reward. And also, instead of paying $500 a pop for basic call, it's only $100 a pop. And there it is at that $1 net debit, which means if Shopify gains $1 over the next 23 days, or in other words, about 0.9% over the next 23 days, I'm going to double my money. Here we go. That's the wrap order. So I'll go ahead and send this off. The price is moving a little bit. I'm just going to set it at $1 and let it sit. Oh, filled right away at $1. So maybe you can go lower than that. And what this means, again, I need Shopify above 110 for me to make my full profit. Let me go to a daily chart. It'll look a little easier to see, to visualize. So here's 110. Here's 7/3 expiration date right there. So if you look at that X, I barely need this thing to move to double my money. As long as it's above that line, by that date, I make 100% return on investment. Ed's filled at $1. Cool. I got filled right away at $1. So you might be able to get it cheaper. If you do want to go for that more outsized move, so Shopify typically averages a 7% gain over this next 23 days. And this is over the last 10 years. It's gone up every year over the last 10 years during this time frame with a big bullish move. If you want to go for that, I'll just round it down to a 5% move. So what if Shopify gains about $5 from here? They'll put it at 113. So I'm going for a little bit under the total full anticipated move. And in this instance, if you do that, it's about a 150% ROI. Well, it's moving all over the place. Now it's showing a crazy 300%. But let me type this up for you guys and I'll walk you through it as well. So again, we're just going to go a little bit out of the money here just to say, what if we do get a bigger move in Shopify as the seasonality suggests? I'm going to call it 35-cent debit. And this tells us that our max profit here is the difference of the spread, so $1. The current entry is at 35 cents. So we're paying 35 cents with hopes to sell it for $1. That gives 185% return on investment. It's a little bit better bang for the buck, but it does need a little bit bigger of a move. However, it's not that crazy big. So here's our expiration date, June 3rd. And if Shopify is above those crosshairs by that date, let me just do this. I'll make it easier to view. All right, so find that date again. Wow, we got time on this one. So for this guy, right there, 113. So it needs to make a little bit bigger move than the wrap order, but nothing crazy. It doesn't need to go to the moon. It just needs to keep chugging higher over the next 3 weeks. And if so, July 3. Yes. Did I say June? July 3. Did I say June somewhere? Anyway, July 3rd would be our expiration. And that's where the crosshair needs to be for us to make 185% return on investments. Sorry, I must have said June at some point. Not 100% sure where, but I probably did. So thank you guys for helping me out there. It is July 3rd. Again, I have that posted in the sheet for anyone who takes the opening playbook. Very expensive $1 VIP membership. So there's my seasonal pick of the week for you guys. So our Apex one, first one to keep our eye on O'Reilly. Stock split, super cheap. Going to be a fun one to trade. But if you want to trade one right now, Bitcoin is my Apex signal of the week. Shopify is the seasonal hot sheet pick of the week. And for the new momentum picks, let's go take a look at our handy dandy scanner here.
Graham, did you write spot? I think you did. I think you wrote spot
right.
somewhere
You're
instead
right.
of shop.
Yep, it's shop.
You're like me now, talking and typing at the same time and getting,
I know.
all mixed up. I do that every time. I type at least one thing backwards when I'm trying to talk.
I'm sorry, guys.
Type at the same time. It's harder than it looks, folks.
Shop.
It's harder than it looks.
Hopefully, spot isn't trading around that. I think it's like, yeah, there was no strikes for that. So at least I didn't get you guys in something wrong. Shopify. Thank you guys. That's why I need you guys here, because you're so helpful. All right. Where was it? Oh, Newton. Let's go over to Newton. I'm just going to pull up my Newton long scanner, which is going to give me the bullish picks today. Someone mentioned that energy is ripping today. Oh, yeah, up nicely. Oh, Oklo flipped back. But yeah, Halliburton is up big. I'm going to try to first start by just clicking this Analyze tab here, which is going to just quickly tell me the sector they're in. Again, I love trading alongside the sectors that are bullish, and I don't really want to trade alongside the ones that aren't. So like materials, for example, LYB may be positive on Newton today, but this is in a downtrend and in a terrible sector. You can trade it and hope for the best, but it's not my kind of cup of tea there. I'm interested to see what's going to happen here. Here's a healthcare one, which again, if you want to play a little more speculative with healthcare, RVTY is flipping positive on Newton, but I'm just going to flip this. I do this live with you guys every time, so I wish I could tell you what stocks I was going to trade before going in, but I can't. Oh, man, UPS. Industrials has been a great one. UPS has not been a great one. So I'm just looking right here right now, and if it's a sector I like, I'm just going to glance over here. See if I can squeeze that out. Nope. I swear I saw one earlier. Discretionary is a solid sector. Where'd that one go? Day. Let's see what this one looks like. Man, it must be just GE and HWM carrying the whole sector. I'm not going to force anything today either. I'm just going to flip through. So Tyler Technologies could be a good one for us. But again, I don't know if I really want to force that right now, because it's like, if you look at XOK, let's just zoom in here to make it easier. Super awesome. Let's look at Tyler Technologies. Kind of lagging, not even above the 200-day moving average. So we might not have one here. It looks like we don't have any great opportunities to the upside today. That said, if you do have Newton, just check back tomorrow. This scanner is designed to give you stocks that are just entering on their first day of a new momentum cycle. So like stocks like Meta wouldn't show up there because it would have shown up on May 1st right here, and maybe you would have bought and made some good money. But that's why we aren't seeing a lot of those stocks right now, because the ones that are participating in the rally are already moving good. Let me just take a look. What was this? Oh, GV. GV. Oh, GV is down 4% today. That could be a good buying opportunity coming up here for this monster of a stock, which is way above its 50-day moving average. So sorry for that there. I guess I shouldn't say sorry. I like to take what the market gives me. I don't want to force a trade. So there's nothing here right now that's too appetizing for me to jump in on a momentum pick today. So for today's trades, I'm just sticking with Shopify. I did say that right this time. Shopify and IBIT on the new entries. Of course, you can get those exact trade details and the deck in the members portal as well. Joseph, haven't been able to follow. If I watch a replay of those picks, too late to enter at that point. Well, that's the beautiful thing about these spreads is that a lot of times, Joseph, I shouldn't say a lot of. If the stock hasn't really moved a ton, you should still be able to get that fill or around that fill. If it goes up crazy, then Joseph, you might be too late. But typically, you should be able to get that fill even if you're catching this in the afternoon, or at least roughly around there. What happened to GEV today? I'm not sure what happened to GEV today. I've been on with you guys. It was only slightly down. Oh, wow. If you go to when I first checked this morning, it was only slightly down. Yeah, it's taking a nosedive. Where's that news thing? I did see somebody. Where's that news tab? Normally there's a button here. You can click news. I might have to zoom out. What on earth? Did they move it? Well, now I see it down here below. Let's see. The only news today in Thinkorswim is that Guggenheim adjusts GEV price target. Guess where they adjusted it? So the stock's at 462 now. Let's see if I pull this up here. Anyone have a guess on where this analyst now has adjusted their price? They have raised the target from 380, which was a long time ago, to 600. So that's the only news we have is that this analyst thinks it's going all the way up here. For some reason, the stock's down today, but that's okay. This is for anyone curious, this is one of my largest holdings. I think if I rank my top 3 holdings, I'm going to do it the correct way this time. Progressive is my number 1 long-term holding. Meta is my number 2 long-term holding, and GEV is my number 3. And that's based on how much I personally have invested in those stocks. So if you missed out on this massive move here from 300 to 500 over the last couple of weeks, might have a good buying opportunity here coming up.